You don't lose money when the market drops. You lose it when you forget who you are. Think that's just philosophy? Right now, thousands of investors are watching ON plummet 23% in a single session and making the most expensive mistake in modern markets. They're not panicking because of what they own. They're panicking because of who they think they are. The disciplined value investor, the growth stock genius, the guy who always picks winners. When the position fails, the identity shatters. And that's when the catastrophic decisions happen, not when the stock drops. When the ego does. Here's what makes this particularly dangerous in 2026. You've built your entire investing identity around a narrative. Maybe you're the tech visionary who spotted the AI boom early. Maybe you're the disciplined index investor who learned from Bogle. Maybe you're the contrarian who zigs when everyone zags. These aren't strategies anymore. They've become who you are. And the moment the market questions that identity, you don't defend your portfolio. You defend your sense of self. That's why you can't sell the losing position. That's why you double down when you should walk away. That's why you're checking your portfolio 60 times a day. You're not monitoring investments. You're checking to see if you're still the person you thought you were. Marcus Aurelius understood this trap 2,000 years ago. He wrote, "It is not death that a man should fear, but he should fear never beginning to live." In Meditations, he's warning against the ultimate poverty, living as a character in a story you're terrified to revise. The Stoic investor knows the deadliest risk isn't market volatility. It's identity rigidity, the inability to adapt because adaptation feels like admission of failure, feels like becoming someone else. The modern investor ties net worth to self-worth. And that equation destroys more wealth than every bear market combined. Let me show you exactly how this plays out. Not in theory, in the decision every investor faces when their identity collides with reality. It's Thursday afternoon. ON just reported earnings, and the stock is down 23%. Alex Chen is staring at his screen in his downtown apartment, and his hands won't stop moving. Scrolling, refreshing, calculating. He bought ON 6 months ago at $97 after 3 weeks of research. Read every analyst report. Listen to every earnings call. Told his friends at dinner it was the most asymmetric risk-reward he'd seen in years. They were impressed. He was the guy who found the hidden gems. The investor with the edge. Now it's trading at 91. And that identity is collapsing in real time. His phone buzzes. Marcus Sterling. They're meeting at the usual spot, the quiet corner of the coffee shop, where Marcus has mentored dozens of investors through moments exactly like this. Alex arrives first, laptop open, spreadsheet loaded, ready to explain why this is different, why his thesis is still intact, why holding is the rational move. Marcus sits down, glances at the screen, and says one sentence. "Tell me who you'll be if you're wrong." Alex blinks. "I'm not wrong. The fundamentals haven't changed. Revenue growth is still 20%. The guidance dip is temporary. The market's overreacting." Marcus's gray eyes don't move. "I didn't ask about the stock. I asked about you. Who will you be if this position goes to zero? If your thesis was incomplete, if you miss something, the question lands like a physical weight, because Alex realizes in that moment what he's actually defending. He's not defending a stock position. He's defending the identity of someone who doesn't make 23% mistakes. Someone who does the research. Someone who's smarter than the market. If he sells now, he's not just locking in a loss. He's admitting he's not who he thought he was. Marcus leans back. Marcus Aurelius kept a practice most people miss. Every morning, he reminded himself that the person who was yesterday might need to die today. Not literally, psychologically. The version of yourself that made that trade 6 months ago had incomplete information. He did his best with what he knew. But you are not that person anymore. You know more now. The market's told you something. Your attachment to being right is stopping you from hearing it. Alex feels his jaw tighten. So I should just sell? Take the loss. Admit I was wrong? Marcus shakes his head. You're still thinking in binary terms. Right investor or wrong investor. Winner or loser. That's the identity trap. The Stoic investor asks a different question. Not am I right or wrong, but what does reality require of me now? If you held no position, if you had no history with this stock, if your ego wasn't wrapped up in the thesis, would you buy ON today at $91? That's the only question that matters. The coffee shop noise fades. Alex looks at his screen again, and this time he sees it differently. He wouldn't buy it today. The risk-reward has changed. His conviction has wavered. But he's been holding because selling would mean becoming the guy who lost 23% on a stock he told everyone about. Marcus watches this realization move across Alex's face. The investors who survive aren't the ones who are always right. They're the ones who can hold their identity loosely enough to adapt when reality changes. You think the problem is the stock. The problem is you're more afraid of being wrong than of losing money. Alex closes his laptop, takes a breath. What would you do? Marcus's weathered hands fold on the table. I'd thank the 23% drop for showing me I was overallocated to my ego. I'd recognize that my identity as a disciplined researcher is intact whether I hold or sell. The discipline isn't in being right, it's in following process regardless of outcome. And I'd ask myself if this position still fits my portfolio based on what I know now, not on who I wanted to be 6 months ago. That afternoon, Alex rebalances. Not in panic, in recognition. He doesn't sell everything. He sizes the position to match his actual conviction, not his identity protection. He buys more of the positions that still align with his process. And for the first time in 6 months, he stops checking his portfolio every hour because he's no longer checking to see if he's still the person he wanted to be. He's just managing capital. This is the shift that separates the investors who compound wealth from the ones who churn accounts for decades. Stop asking if you're a good investor or a bad investor. Start asking if your decisions serve your capital or your ego. Marcus Aurelius wrote, "Be like the promontory against which the waves continually break, but it stands firm and tames the fury of the water around it." The waves aren't market drops. They're identity disruptions. The moments when reality tells you you're not who you thought you were. The Stoic investor stands firm, not because they're always right, but because they're not afraid to be wrong. Next time you're staring at a position that's challenging your identity, do this. Write one sentence on a card. I am not my portfolio. I am the process I follow. Read it before you make the decision, not as a mantra. As a reminder that your worth as an investor isn't measured in any single outcome. It's measured in whether you can adapt when the story changes. That's the trait that survives every market. The investors who survive every market cycle all share one trait. Next video names it.